You are here again. Welcome, everyone, to A Glimpse of Growth with Dr. Dale. The conversation today is another juicy one. And I want you guys to know that I am here with you. You are here with me. We are here together. And I want you to know I am happy you are here. So, welcome to another episode of A Glimpse of Growth. So today's topic theme is yummy, as usual. And the guest is even more fabulous, right? So the topic is from protection to prosperity. How the right policy can fund your future. Intriguing, right? And I'll tell you now that this conversation is very practical. So it's not something la la land, pretend, none of that stuff. This is what it is today, and maybe something that you may have not considered or haven't thought about because life is lifing out here right now. And we get all over the place and there's a lot going on. So conversation like these they come up to remind us, oh yeah, I need to do that. Oh yeah, I need to get into that. So this episode today, this conversation today, we explore how policies, insurance policies, or, maybe your employee benefits, whatever that looks like, you probably need to consider going beyond what you're getting right now. I don't know. I'm just saying. So let this conversation be a starter for you where you can go from where you are right now and be better, right? And do better, right? And it starts with small conversations like this one. So again, our conversation is from protection to prosperity, how the right policy can fund your future. So please know that the conversations that we have, that this conversation is about to be today, is important for you so that way you can take it to the next, right? We're just here to give you information, just information. And sometimes that information can lead to transformation, right? Educational. And from there, you take it to whoever you need to take it to and keep the conversation going and put some action behind it. So with further ado, I am going to bring up our wonderful guest, Rachel. I met Rachel at the FSMSDC, the Florida State Minority Supplier Development Council. They had an event about a month or so ago, and Rachel and I met and we started conversating, and one thing led to another, and here we are. So Rachel, I'm gonna hand it over to you. Kind of tell the folks, who are you, what are you passionate about, what do you do, and the floor is yours.
Thank you, Dr. Dell, and thank you so much for having me. So my name is Rachel Machad, as she said, also known as your financial fairy godmother. That's my branding. So I am a wartime U.S. Army veteran, life insurance and retirement broker, and the proud founder of Life Legacy Builders, where we help, families protect their peace, grow their money, and leave a legacy. Okay. I specialize in educating families. That's like the main thing. We educate families, entrepreneurs, and ambitious women on how to build generational wealth through powerful tools like life insurance, annuities, living benefits, and long-term care. I'm also Miss Ocoee for the Miss Corporate America pageant, which allows me to amplify my mission of financial empowerment and community impact on like a bigger stage. So at the end of the day, I'm here to make sure, people are financially confident, covered, and equipped to pass down more than just memories, to pass down a legacy.
My. You said so much. I want to dive into so much that you just said. So wait, okay. So pretty much, let's say a Miss America or pageant. So a beauty queen, military,
Mhm.
You're talking money, right? And then is are you an author?
Yes, I'm an author. Yeah.
What is your book called? What is it called?
It's called Women's Successful Devotional, to help women, be inspired about. It's mostly like entrepreneurs or business owners and people like that, or even if you're not that, just some successful tips to help you along your journey.
Where did these tips come from that you have in your book? And your book is a bestseller as well, right?
Yes. Yes.
Congratulations.
Thank you so much. I am a co-author. It's about like a couple of amazing women, including myself. So yeah. But yeah, these tips came from like my personal journey and my personal stories. So I just put it in there because, there's a lot of people, a lot of women that's in the same situation that you're in. So, I just put it in there because if I had someone, that wrote a book like that or put their tips on how to be successful on their journey, it would have been nice, So since I didn't have that, I created it. So, to help women.
You said, I say this all the time. If I know half the things I know now, if I knew them 10,
Yeah.
15 years ago, or somebody to say them to me or share them with me, man, your girl would have been a millionaire a couple of times over.
Yeah, exactly.
And so it
Right.
sucks, right? Because you know what it is. They say that, oh, it what is that saying? They say that what you don't know hurt you.
Mm-hmm. Yeah. Yeah.
Nothing to do with that. That's not
Right.
because if you don't know the lack of, it can hurt you, right? It can hurt you, right? And let's go to what we're talking about today, the conversation today about from protection to prosperity.
Yeah.
You're talking about in so many ways, but let's narrow it down from that life insurance, from that insurance point blank, or finances point blank. You mentioned annuities as well. Like,
Yeah.
what is annuity again?
Well, annuities, it is a life insurance product. But there's like some differences between like that and a 401k or a Roth IRA. So with the, when the market is going up, your money's doing good. Your Roth IRAs, your 401ks, your stocks, your cash in your annuities. But when the market is down, those things could be affected, but not your annuities, because there's a 0% floor, so you never lose money. It doesn't
Yeah.
have fees associated with it compared to like a 401k or a Roth IRA, because a lot of people have lost their money in their 401k during like the pandemics, real estate market crashes back in 2008, or just
Yeah.
different, stressful times that we have in the world. But with your fixed index annuities specifically, like you don't lose money. There's no fees. With that, there's living benefits and long-term care, since it is a life insurance product. But with the 401ks or Roth IRAs, it doesn't have all that, So it's just a matter of which one would you prefer, to put your money in a 401k or a fixed index annuity. Not only that, one of the most important things is that it has like guaranteed income for the rest of your life. A 401k, it doesn't. So.
Okay, so you just gave a whole mess. Okay, so Rachel, question. Why is having your finances and building, you said legacy, right, instead of just memories?
Mm-hmm.
Why is this important to you, and why do you think it's important to other people?
Well, it's important because, most people, when they think of life insurance, they think of death, but it's more than that. You can actually use it while you're living. It's not for only when you die, or some people may think, oh, it's for when I get older, but no, a policy is power, and you're leveraging the life insurance for your life. It's a way to instantly create your money, or create money for your family, whether you're rich or not. For a small monthly amount, you can have like hundreds of thousands, saved up for emergencies, college, even if you want to start a business. It's like giving your family a financial superpower that
Yeah.
kicks in when you need it the most, So, but yeah, you can use it to um, pay off a house. You can use it to buy a car. You can use it to, send your kids to college, as I mentioned. You can do a lot with it. It doesn't only have to be like health related. You can use it for non-health related ways also.
Okay. So I'm sure you're blowing some people's mind, right? And if you guys are here with us, comment down below. Let us know what you think. If you knew this, if this is blowing your mind, like it's like making me scratch my head. So, Rachel, here's a question for you. Give me an example. Are you saying that anybody can go and buy whatever, a life insurance, right? And they can take the money from that life insurance and invest it, or give, or buy house with it and pay off my son's school with it? Is that what you're saying?
Yeah, you absolutely can. It's tax advantage, cash value that you get. And I've actually had a friend. She's she actually did that. She paid the rest of her house, with her life insurance policy. I've had people use it, just to test it out. Well, let me see if this really works. They've taken out like $10,000 and started a business, and you don't even have to pay it back. Depending on what policy you have, they won't charge you a penalty if you don't put it back, and it continues to grow, and build, a legacy and wealth for your family. And it compounds higher too at what the banks are giving. So a lot of people like that. You don't have to claim it on taxes. You don't have to, it's protected against like lawsuit. If somebody were to come after you for whatever reason, it's protected against bankruptcies. It's protected against divorce. Like, it's just, something I just wish they taught it in school, like we didn't.
Financial literacy, how does your money move, and how to make sure that you are set up so that way you don't have to be living from paycheck to paycheck.
Yes. The only thing I learned in school is in terms of like finance is how to write a check. That's literally the only thing I learned how, about money in school. And that was middle school, early, not even in high school.
And credit card, I learned about credit card after I got in debt with credit card when I was coming out of high school.
Yeah. Yep. They don't teach us these things. So that's why we like to educate and teach people these things, because they'll do one thing, which is the right thing, using life insurance, leveraging it while you're alive, and they tell us to do something else. We're taught to go to school, get good grades, graduate, get a good job that has good benefits, and we work until we retire, so and oftentimes by the time people retire, they don't want to do anything. They're too tired, or maybe they feel too old because they're like sick or whatever the case may be, like we want to retire young so we can enjoy our money young.
Right.
Now we want to enjoy it right now.
Right. 100%. Like the what is you're making me think of that slogan that I hear. It's my money and I want it now.
I want it now. Right.
So what if a 20-year-old is looking at this, or a 30-year-old, and they're saying, this is too good to be true. Click, move on to next. This is not true. What would you say to them?
I would tell them, if I was like back in my 20s, I just wish I knew this when I was younger. I wish my parents knew this when we were younger, because by the time we're like 20s, 30s, even 40s, we're multimillionaires. And that's what the wealthy people do. They put these policies on babies, because you can put it on babies. As soon as a child that has just been born had gotten their social security card, you could put a policy on them. And by the time they're like 20, 30 years old, they're multimillionaires, because, the wealthy people know how to use money, right? Obviously. So they let it compound, they're not using it or anything. And by the time, they're like of age to go to college or anything like that, they could either choose to go to college, they could choose to go build a business, start a business, or whatever the case may be. But they have that money sitting there, So if I were, younger or got a chance to do it again, I I would definitely, have gotten a policy way sooner, because the younger, the healthier you are, the lower your monthly premium is going to be too. So I
Oh,
always tell people, just get something, even if it's not a lot, because you can put anywhere from like $20 in a policy or to over $1,000. The more you put in
right.
there, of course, the higher it's going to compound, because with the banks, we get back what 0.001% back at the end of the year. But with
Yeah,
the policy, because it's growing at maybe 6, 7, 8%, 12%, whatever the case may be, depending how the market is,
yeah.
you're gaining 12%, 8% on, your money. So if I was younger, I would definitely, wish I got it sooner. Like when I have kids, as soon as they're babies, they're getting a policy, because you don't, it's not only for, not only for creating wealth, but even like when you're sick, because it has a
Yeah,
living benefit. So if you were to have like a heart attack, stroke, cancer, diabetes, Alzheimer's and dementia, because that's becoming more prevalent,
yeah,
use your policy to help you with that. We have an agent at my office.
yeah,
Her brother got diagnosed with Alzheimer's at age 55. To me, that's
yeah,
so young to be diagnosed with that. He's 58 years old now, but yeah,
yeah.
he was diagnosed when he was 55. He's living in Miami. Miami
Mhm.
tend to be very pricey, and she's putting or paying $8,000 every single month just to keep him in that long-term care facility, because health insurance is not going to pay for it. So where's the money going to come from? So I always tell people, get it now. You want to get it before you need it, just like car insurance. You're not going to get car insurance after you get in a car
An
accident.
accident. Yeah,
The premium is going to be higher. You're
right,
not going
right.
to get homeowners insurance, after a pipe burst in your house. And that happened to me a couple of months ago. It's not fun. We had like the fans and all that stuff. Not fun. So,
Not fun at
you
all.
get those things prior. So a lot of people, they tend to have homeowners insurance, renters insurance if they're renting. They have car insurance. They even have cell phone insurance. They even have insurance on their pet, but not them, and those things, minus the pet, those things aren't guaranteed that you'll actually use it. But something that is guaranteed is death. But a lot of people don't have life insurance on themselves.
Yeah,
Like we're all going to go one day, but it's like you want to make sure your family is set up when you do pass. Not only that, when you need the money while you're alive, you can still use it too. We had,
right.
and case in point, we had a 25-year-old guy. He was young, healthy, 25. He was married. He got $1 million term policy, paying like less than $100 on it, right?
Uh-huh.
And 3 months later, he passed away in his sleep. Yeah, and so his wife called the company and said, "Hey, my husband just passed away. I'd like to access the $1 million death benefit. How do I go about doing that?" So we looked in our system, only to find out that he canceled his policy 2 weeks prior to passing
You
away.
are lying.
I kid you not. So, and guess what she had to do? Create a GoFundMe account to try to raise money to bury her husband. And nowadays,
Wow.
it's pricey to bury someone, anywhere between like $10,000 and $20,000 just to bury a loved one, a family member.
Mhm.
And
Mhm.
it's tough. It's tough. So, it was unfortunate, but this not having a policy is really why GoFundMe, fish fries goes popular, for all the wrong reasons. So we
Yeah.
just educate people and let them know, just get something. I don't care if it's a term, an IUL, a final expense,
Yeah.
just get something. Because if you and your spouse were to pass away, how are your kids going to live? Are they going to have money for the next 2, 3, 4 years? Or are they going to go through the foster care system? The
Yeah.
foster care system is not the best system, so what's going to happen to your kids if you and your husband, or whoever the case may be, were to pass away?
Yeah.
If you're an auntie watching your kids, your nieces and nephew, who's going to take care of them if mom and dad is not there, if you auntie or uncle is not there? Like,
Right.
are they just going to be passed on, from family to family? So we just like to protect people and educate people to make sure, they have something wise set up.
So I think that and this is and I think the generation before us, even more so, right, didn't know, right, a lot of things, right? So
Yeah.
where is it? We say that our generation, the Gen Zs and the millennials,
Millennials, yeah.
We say we want to do better, right? We
Mhm.
say we're going to do better than our parents. This
Yeah.
is a chance for us to do better,
Yep.
right? This is a
Yep.
chance for us to get ahead of it. And
Yeah.
again, like you said, don't use the policy or look for the policy when you
Need it.
when
Yeah.
of it, so that way you are insured. And people, and I say, what do you, I'm sure you've heard this already. People say, I hear people say all the time, insurances are a bunch of scams. What do you think about that? What do you say to that?
Yeah. Well, I mean, they're valid for feeling how they feel, but I used to think that too until I got into the industry and really learned it, and sometimes
Yeah.
you have to do that when you don't understand a topic or a subject. You have to hone in and just learn that topic, learn and learn as much as you can. So it was until I got into the industry, I was thinking like, oh wow, this is not a scam. Like, why aren't more people talking about this? There's a reason for that. Imagine everyone in the world had a policy, and they're building wealth. They probably wouldn't rely on the government because they could rely on what they have, but yeah, some people think that because they're uneducated. And that's how it is for every topic. You'll talk about something, but it's because you like, knowledge or education about it. So same thing with, life insurance. They're valid for how they feel, but it's because they don't know.
But it doesn't change the fact that you still need to have the money for when a loved one dies, or you yourself. Either it's going to be somebody else's responsibility or is your responsibility.
Exactly.
The thing is,
Exactly.
get out of it, right? Because it doesn't matter what you feel about it, you still gonna need it.
Absolutely. And you just reminded me of another story. Oh my gosh, I have stories for days. But
I'm sure.
But yeah, there was so one of our agents at our office, his sister passed away of lupus, unfortunately, right? She did have life insurance though. It was $13,000. And so, they used that as much as they could for her.
Yeah.
But after she passed away, that's when they learned that she had $1 million of medical debt. Yeah. So they're paying that now, or figuring out, how to pay that each month, because they didn't know. I don't know. I don't even know if she knows. She was probably just going to the doctors and, getting treatment, checkups, follow-ups and stuff like that. So yeah, $13,000 policy, but $1 million in medical debt. And medical debt is the number one cause of debt in America today. And not only that, it's the number one cause of bankruptcies too, which, specifically long-term care, because, people just don't have the money to take care of their family when they're sick. So, by having policy and building your wealth, they always say your health is wealth, so it really is,
So you just said something. One, I started my business Dale Reports 2023. Mm-hmm. So where were you when 2 years before I could have something started with this insurance, and then 2023 I could have just cashed in and got something to help me build my business.
Yep, it's true. It's true. And a lot of people do that. A lot of business owners leverage life insurance while they're living, to make them more money and to build wealth. Like even celebrities, some celebrities talk about it. Waka Flocka, he was at our conference last year. He was talking about putting a couple millions. Yeah, he'll just throw millions of dollars in his life insurance policy whenever he needs it. He'll take some out because it's compounded. Imagine $1 million in your bank growing at 0.001% compared to $1 million in your life insurance policy, tax advantage, okay, growing at say 8%. That's a big difference.
Yeah.
So that's what he does. That's what a lot of wealthy people do. But
Wow. Okay. So I heard this, right? And I'm ashamed to say what I heard, but I'm gonna say it anyways because it is what it is.
Wait, you broke up. Say that again, please.
I said I heard it on TikTok, right?
Okay.
The gentleman said that I can get a whole life insurance, get that insurance, put it in a trust, and then use that money to go buy a $200,000 and $310,000 house.
Mhm.
I'm sure after a year or two, after it being accruing or whatever.
Yeah,
Is
yeah.
that
So that is right. That is true. You can put your money, in there and put in a trust. You definitely want to put in a trust. The thing with the whole life policy, and I always like to educate my clients, about this. There is a difference between like your whole life policy and your index universal life insurance, for example, the IUL, also known as a LIRP, life insurance retirement plan.
Yeah.
And the thing with the whole life policy is that, so one, when the insured passes away, your death benefit, it goes to your family. Great, right?
Right.
But the cash value, your money that's been growing in there, when you pass away, it goes right back to the insurance company. Versus like an IUL, once the insured passes away, the family not only gets the death benefit, but they also get the cash value as well. So I always tell them, and I say, don't take my word for it. I'm just educating you, but go ahead and ask the person that sold you the policy, or just call the company and to see if it's true. And, they call me back like, hey, it is true. I don't know why agents don't tell their clients that, but yeah, that's one thing. Another thing with the whole life policy is that if you wanted to, say, take out $20,000 to borrow it, it'll come out of your cash value, or your death benefit, not your cash value, your death benefit, and say you want to put the money back. Now they're going to charge it as a loan, which could be anywhere between 5 to 6%. Yeah. So that's another difference compared to an IUL. If you wanted to borrow $20,000, it's going to come out of your cash value. And if you don't put it back, they're not going to charge you tax on it. They're not going to charge you a penalty. So you don't have to put it back. And then your death benefit continues to grow.
So the IUL is another type of life insurance.
It is, just like the whole life. And then a third difference is that with the IUL, your death benefit increases. So not only your cash value is increasing, but your death benefit increases too. With the whole life policy, say you got a $500,000 policy, even if the policy is 20, 30 years old, it will always be $500,000. So it's level. So it doesn't increase like the IUL death benefit does. So those are some differences. I like to educate people and, help them make a wise decision.
Wow. What is the average amount of, what is America or the world from an insurance standpoint? How many people on average have insurance?
Well, that's a great question. I haven't actually looked at that, but I know from what I have been taught, it's not like an exceedingly high number. So many people don't have life insurance. And some people say, well, I can't afford life insurance. And I tell people, you can't really afford not to have life insurance because it's going to cost you more. A lot of people miss out on, like life-changing money because they simply didn't know what's available, so they wait too long, or they don't think they qualify, or nobody ever taught them how it works. But the truth is, waiting, can cost you. It will cost you because every year you wait, the price goes up. If your health changes
because of life, right? And of course the taxes and everything. So nothing that is everything that it takes to move money moves, right? Because it's constantly, the society and marketplace is constantly changing and growing.
Exactly. And I tell them too, like, hey, if your health changes, you may not even qualify, so not knowing or not asking questions, isn't free. It actually costs you big time. So we've had instances like that. One of my brokers, she was trying to help a woman get life insurance, but she was like, oh, I don't have time. She just kept putting it off, like we do sometimes with a lot of different, right?
Pretty much, yeah.
And so she got in a really bad car accident. She ended up in having kidney issues. And then so we called my broker and said, hey, I want to see if I, qualify for life insurance. But by that time, she didn't qualify. And she ended up going into a coma and ended up passing away a couple of weeks, later. So I don't know what her And I know she was going to have medical debt too, because, from those weeks, from the car accident,
Yeah,
hospital, staying there
yeah,
for a bit, and,
yeah. She
you
was
know,
like, no, I don't need this. Give me a successful story where somebody did it just in the nick of time.
oh, I have the perfect story. So we had a woman, she was like in her 60s. She was a little
Hmm.
older. Um, she got a policy, right? It was about like
Hmm.
half a million. And she got a policy, and that morning her policy got approved. That evening she passed away. So without paying a monthly premium, though, listen to this, without paying a monthly premium, the life insurance policy paid out to her beneficiary, because we didn't know she was going to die. She didn't know she was going to die, but she was proactive. Even though she was a little older, she was proactive and got the policy before she passed away. So
And how much
that
was the payout?
it was 500,000, 500,000. Yeah. So she just
Wow.
did a
So
really
she
good
blessed her loved one like right on the
job.
way out. She's like, I got
Right
you.
in the nick of time, I'm telling you. So we know
Wow.
when our time is up. I just heard there's this guy. He's very popular on social media. Uh,
Yeah.
Corey Williams, I think is his name.
Yeah.
He was 47 years old, entrepreneur doing his thing. He just passed away in his sleep not too long ago. Not too long ago, just passed away. Corey Williams, I believe, is his name. Yeah.
So I just did this. I did this quick stat,
Search.
and
Okay.
it said that percentage of Americans with life insurance, roughly 60% of Americans, 60% of Americans have some form of life insurance.
Okay.
But that is lower for minorities, of
Mm.
course,
Yeah.
and of course due to lack of awareness.
Mhm.
Awareness in the workplace benefits, awareness in life, and not having the resources, and it is
Mhm.
seen as the icing on a cake. I don't need icing on my cake. I just need the
Yeah.
cake.
Yeah. The whole cake and icing.
You need
Now,
the cake, the icing,
yeah,
the
I need the
materials to
icing,
make it.
everything.
You
I
need
want it all. And so, the statistic that you just look up, is
Yeah,
that including insurance with their job? Because that's a difference too.
that yes.
Okay.
Coverage
So,
around it says 42% of Americans. So it's lower
mhm.
when you don't have your employer, because a lot of people don't have
You
a lot
see?
not working, right?
Yeah,
So that
exactly.
number might be even lower for people
Yeah,
that
for
work
sure.
in.
For sure. And a lot of people ask me that it's a really good question that people ask me, like, okay, Rachel, I have life insurance with my job. Is that
Yeah,
good? Is that bad? And I
yeah,
tell them it's not the worst thing, but it's not the best thing either, because that policy that you have with your job is a term policy. It doesn't have living benefits. It doesn't have long-term care. Okay. So if you were to get fired, quit, transfer somewhere else, that policy is not going to come with you.
and I can't get money out of it like I can with a
Definitely
with a
doesn't
whole
have
life.
cash value, right? Because it's a term policy. So our term policies, it has the living benefits and a long-term care, but it doesn't have the cash value either. It's only a benefit with the permanent life insurance policies. So yeah, so if you were to go, that policy ends. Not only that, our monthly premiums are fixed. Okay, so your monthly premium with your employer is not fixed. It actually increases every year. Okay, so there is a huge benefit between having life insurance with your coworker or with your employer and
Yeah.
outside of your employer. So a lot of my clients, some of them will keep it, and just get life insurance outside with us, or they'll just cancel it and get life insurance outside with us.
And get it the way they want to be covered, so that way in case they need something, which 9 times out of 10 you always need something.
Yes, because like people say, life be life, and it's true.
Yeah.
The thing about it, we don't know when it's gonna life,
No,
so
we don't.
better to protect yourself prior.
No, we do not.
Yeah.
What do you think what does it look like for you, for people, for folks, whether they're professional working or not? Like, what is that first step that you think they should make in order to get them out of that lack mindset, and I can't afford it, to let me start my family, my legacy on a different path this month? What is that first 1 or 2 things that they need to do, you think?
The first step I would say is that they need to make a decision. Do you want to continue that generational cycle, or does it stop with you? Do you want to make a change? That way, when you're gone, when you're long gone, is it going to be different for your family? So the first thing would be to make a decision. Then, they can schedule a 15, 20-minute, free consultation call with us, just to see what it would look like for them, because we design the policies in such a way that it benefits them. We don't tell them, okay, because a lot of people, they don't even know how much coverage they need, or if they have enough coverage, and a lot of people are underinsured. So we have this formula we call the DIMO method, which is all your amount of debt, your income times 10, mortgage, and your education loans. And we, do the calculations just to figure out if they have enough coverage and to see how much coverage they need. And then we formulate a plan for them, because everyone has different needs, different wants, for them, their family, their kids. So we like to design it specific for them.
I love that. I love that. So just a 15, 20-minute conversation to see where they are, to see, and you can kind of decipher and send you. And maybe it's not, maybe they decide to do nothing today, right? But now they have planted the seed, right?
Yeah.
They have planted the seed to start going in it, because awareness is the first key. I mean, if you don't know, you don't know what you don't know, right?
Exactly.
And as we started in this beginning of this conversation, it pays to know.
Yeah, I know. Yeah, exactly. And your policy is, you could use it as a means to transfer wealth. It's that type of tool. Life insurance isn't just when you pass away. It's one of the smartest ways you can pass down money. It skips the courts, avoid taxes, probates, and gets into your family's hand fast, and it doesn't even stop there. Some policies, a lot of the policies that we're talking about, they grow while you're alive, so it's good. It's, gosh, I wish I knew this when I was younger, but it's okay. I know now.
Okay. So we're gonna do it now. We're gonna do it now. And I love what you said. Decide, right? And Bob Proctor spoke about decision. You can't do anything if you don't decide what you're going to do. Yes. And once you decide, then you worry about the what and this and the how, and that's after, but you got to decide which direction to go in, right? Because if you don't decide, you are still in between. Is it left or is it right? But the fact that you don't do anything is a decision. You're deciding to not do something.
Exactly. I love me some Bob Proctor. May he rest in peace, but I've listened to him since 2017-ish. Oh my goodness. He used to host free webinars on Facebook.
Yes.
5 days. I used to be on all of them every year.
So great minds think alike, right? And this is another way for you as a leader. And when I say leader, you may not be a leader of people. You are first and foremost leader of yourself.
Yes, yourself.
Right? Yourself. And so that means all of the people that are coming behind you are coming to the side of you, right? Friends, families, coworkers, church, all the relationships, right? So you got to decide for yourself, what does that legacy, what is your legacy going to look like? And let me tell you, I guarantee you're going to need money.
Yeah. With inflation, gas prices going up, every time, every year.
This year has brought in.
Yeah.
This little thing right here. You're going to need some of that. Right. Absolutely. And this is a way for you to get ahead of that. Right. Because you don't know what 2026. Are we 2025? Is 2026? Okay. Yeah. It's so fast.
It's so fast. We're already past half the year. So
yes. So very true. So I want to make sure that you guys can get on to Rachel. Rachel, you are also on LinkedIn, right? Rachel Machard.
Rachel Machard.
Yeah.
Mm-hmm. Yep.
Okay, so, and this is her link tree. We all got Linktree. If you don't get Linktree, or just connect with Rachel on LinkedIn, DM her if you guys want a conversation. I'm also going to tag her down below, so that way you guys can be able to get to her easier. And any questions, just at least ask. The fact that you don't know is not an excuse for you to keep going in that same direction.
Exactly. It's
so
true.
Do it.
Yeah.
Don't do it. So I am here, of course, just a glimpse of growth, right? If you just move just a little bit in the right direction, then you will get to a better end or a better outcome. But you got to make a decision today, right? And that's why I love these kinds of conversations and bringing you amazing, lovely, fabulous experts like Rachel that comes in and drop her knowledge, her, all that her experience in just a little short period of time, so you guys can get an idea of what you need to do and what's next for your life. Not only, and then it takes away the emotional pressure, right? Like, oh, what if, like, that shoe that drops, you don't know when it's gonna drop, and then you always worried and stressed and frustrated and anxiety.
Exactly.
This is a way for you to stop worrying. At least just a little bit, right? If you knew that you had $20,000 set away, put away, and all you have to do is pay $60, $80 a month, what you doing? What you doing with your life, people?
Yes.
So, Rachel, thank you so much for coming in. Is there, Rachel, I always like to ask all my guests your favorite quote or Bible verse or phrase that you want to share, and drop that on them. And if you want to share anything else before we get out of here, the floor is yours.
Yeah, absolutely. So I wanted to touch a little bit on financial EQ. A lot of people lack it, but having financial EQ means being smart about your money and staying calm when life throws curveballs, because they do. Like we mentioned earlier, life be lifing, right? So when your family is protected, you don't panic. It's kind of like having money in the bank. When you have money in the bank, you're not scared to use your debit card. You're not scared to eat, in public places with your friends and, or family, so, that's just what
you ain't got to be checking like, wait, let me check.
No, let me check my app. And that's just what like a really good life insurance policy does. It gives you peace of mind so you can, take good risks, follow your dream and not stress about, what may happen in the future, because things always happen. But yeah, so my favorite scripture, I love Mark 11 verse 24. So whatever you ask for in prayer, believe that you have received it and it will be yours, because I believe we have everything that we want. We just have to get to that level, to that frequency of what it is that we want, so we can achieve those like goals and stuff. So some people are looking for like a really good policy, to pass down to their family or even use while they're alive. And, contact me and I'll definitely help them out. I'll make sure you're squared away. But, and my favorite quote at this moment is cherish each moment. Okay. So life is very short. It's always good to treat people with kindness and love, because, we'll all go away one day. But, what we do want to be remembered as, what is it? What do we want to be remembered as? So I always say cherish each moment.
Oh my gosh, I love it. Thank you so much, Rachel, for coming in and sharing. I have learned so much, and you and I definitely need to continue conversation, because you need to help a girl out as well. So that's all we got for you guys today, folks. You guys know how to get onto Rachel Machad.
Yes.
And that's her last name, Michaud. Okay.
Yeah.
And let the rest, you decide the legacy of your family. Decide it today. And reach out to Rachel. So with that, I'll see you guys. We'll see you guys next week for another glimpse of growth with Dr. Dale. Thank you, Rachel.
Bye.
Thank you for being here and supporting this channel. If you enjoyed this episode and this content, it would mean a lot to me if you would take a few seconds to ensure you are subscribed to A Glimpse of Growth with Dr. Dale. Click the notification bell to receive notification. Share it with someone you think may need it. And let's continue to become more intelligent with our emotions. Thank you. See you later.